Hi, welcome to the Market Alert for Tuesday, the 23rd of August 2022. So stocks and bonds slammed as market reprices rate hike trajectory ahead of the Jackson Hole Symposium, which is later this week. Are we there yet? We are, according to Goldman Sachs. Biggest bull turns bearish, and the US stocks and bonds declined while Euro USD slipped below parity amongst energy woes. And European energy crisis sees euro make new lows, multi-decade lows versus the dollar. And this is an interesting article as well from the Wall Street Journal, which says there the S&P's big number, a rise that looks like past bear market rallies. If we just come down to this bit, the 17.4%, and this is over the last 41 days where we've seen the market rally. That's how much the S&P has risen during the past 41 trading days. That's 17.4%. And according to a recent Bank of America note, average gains for the S&P during the past 43 bear market rallies have been 17.2 over an average duration of 39 trading days. So we've got 39 trading days, 41 trading days to put on the 17.4 there. So basically what we're saying is that stocks often jump in the midst of a bear market, only to sometimes give up those gains and fall further. This is known as a bear market rally, and that appears to be what we're actually seeing at the moment unfolding. News. Today is flash news, which is a pain. As you'll see, they're all the way up to 9:30. We get all of the European countries, the UK as well. Then we've got CBI industrial order expectations, and then the flash from the US at 2:45, and then consumer, new home sales, and Richmond manufacturing also released at 3 p.m. Later on in the week, as I mentioned at the start there, we've got the Jackson Hole Symposium, and I think that kicks in on Thursday, day one. That's where Powell will be talking. He's also going to be speaking on Friday at 3 p.m. as well, which obviously going to try and lend some support to the market. Also, the continuation of the Jackson Hole Symposium, as well as Saturday, day 3 as well. So he's got to work an extra day this week. So a lot of news this week for sure, but the market doesn't really need too much because it's managing to move lower by itself with the energy crisis in Europe. But just before we move on to that, let's get into the markets and have a look and play catch up from Friday. So you can see on Friday the Dow started to turn after we'd hit the recent highs, back through the 200 MA, back through 38 on Friday, and then continuing lower during yesterday where we traded down to the 78% retracement and also the 20 bar moving average. The market taking this out overnight at the moment. We'll look at the 30-minute chart in just a moment, but the 89 and the 50 bar moving average definitely on the cards there. So I'm going to remove all of these smaller numbers here down to the 89. We just looks like we're heading there, and I'm going to come to this low here before the market made its sort of last move, because you got a small move in there and then up, and we'll just take these out as well where the market's traded to. So you can see we've just come through 62% in the bigger swing, and then we've got that 89 that we just left in, followed by a 78 and 89, which takes you to the 50 EMA as well there. So that's sort of the next downside target for the Dow. In the 30-minute chart, it was down all the way apart from one brief half an hour where the market managed to rally. But as we headed into the close and the evening, you can see the market trading lower. Also notice that the market is heading to the low at the moment. We've got an 89% retracement, which includes last night and overnight as the market retraces. This low is very important. See if the market will hold. It's also 33,008 at the moment. So it's actually 33,000, that is, isn't it? Yes, it is. So 33,000 is the next psychological level as well, and this is where the market's bounced off. So this low is very important. If this is taken out, then we can expect lower prices. Just have a look at the weekly chart, see where we are. We've got a long way to go on this one back down to those lows, but it doesn't take long when the market starts to sell off, as you can see before how big the bars are on the downside. So yeah, 38.50 tying in with the 20 bar moving average, and then you've got your usual 62, 78 and 89 as well if the market goes down to these areas. The weekly chart is also overbought, as is the daily, I suspect. Yes, it's coming off those highs now, so heading to the downside. And in the German DAX, the market struggling with that 62%, as we saw last week. Friday continuing lower as the European energy crisis started to unfold at the end of last week. We're already through the 78% retracement. 89 is the next downside target. Then the low that we have here, this low is 13,030. So 13,000 really is going to be a very important level for this market, and has played a fundamental part in bounces before in this area. So in the 30-minute chart of the German DAX, you can see also heading towards the low there, but the psychological level of 13,000 is going to be very important for this market, which will take us down to the S2 level, is it? Yeah, more or less the S2. I think that's 13,000. Yeah, this level here is the 13,000. So if we break the low convincingly, the S1 and then down to the S2 is the psychological level for the German DAX. Yesterday, the market rallying in the futures, but then as soon as the cash market opened, actually this is the cash market opening, let me just pull this back a bit. There you go, we had a bit of a move to the downside yesterday morning. Then we had the cash rally to Friday's low, and then the market, once it turned bearish, continued bearish. Missed all the action yesterday with being away, but back in the saddle today. And then you can see during the morning we had a bit of a rally there, double bottom after being oversold. Then we went back to overbought, and then we continued lower throughout the mid-morning. And then when the Dow came on stream, just fairly quiet, bouncing off the 20 bar moving average, but still finding support at this BRN before an 89% retracement, and then rallying back up, as we can see there. Last week's results, while I'm here, we started off really quiet, as you can see there, not a lot because the market's really quiet. Then it kicked off on Friday, and then we ended the week really well with, as you can see there, 421. It was 50-50 for the week, as you'll see there, profit factor of 2, but kicking off quite nicely yesterday, but unfortunately missed the move because I wasn't here. So I'm playing catch up so far this week. And in the S&P, you can see that we've sailed through all of the fibs so far, apart from 89, a bit like the Dow, holding there at the moment. And again, if we redraw this through to this area here, you'll see that the 89 tying in with this low to the left, where the market found a bit of support and moved higher before. If we take out the 89 there, then we'll use this low. Let me just remove those so we can see we've got a bigger picture there. So we've got 50% there, 62 for the 50 EMA, and then down to 78 and 89. Again, not too dissimilar from the Dow. 30-minute S&P, very similar to the Dow, except we had managed 3 half an hours where the market was sideways, and then in the afternoon also 3 there. It's actually 4 in the morning. But again, finding support at the S3. The S3, a very important area. 90% of the time the market will stop there and have a breather before it either bounces or makes a new move. S&P also had traded down overnight as well, and is also very at that critical point of taking out the low as well. But we are oversold there, and the market waiting for the flash news out at 7 onwards. In the FTSE, still looking strong, isn't it? It's remarkable when you look back at all the other markets, so certainly the daily of the S&P and certainly the DAX, and then you look at the FTSE, considering everything that's going on with the after the figures of yesterday, 18% inflation by Christmas, and gas and fuel energy costs of near 6,000 a year for us all. It's incredible that this market is holding up like this. I suppose when it does go, it'll go with a bang, but at the moment, just the one red bar there. So if we look into 30-minute, watch yesterday's low if we get a move to the downside. If that's taken out, then it will add a bit of momentum to the downside for these numbers in the daily. Watch that 20-bar moving average as well in the daily chart. And in the currencies coming under pressure, the dollar marching strongly to the upside at the moment. The yen trading down to that 62% or just below 62%, yesterday's low. We've certainly got a downtrend intact there, but watch the 78.89 level. 30-minute chart, you can see we had a bit of a sell-off yesterday, but then a good 62% bounce as the market's traded sideways overnight, spiked a little and then gone down, and it's having a look at yesterday's low. Low is very important, so keep an eye on this. The pound, different situation completely. As we see prices trading down to the 117 area already, it's taken this out. That was a low that was made to the left before we had a bit of a rally in the pound in the 89% retracement before moving lower. Going to go to the monthly chart, and we're back to looking at the 114 level as well. We could go to parity on the pound as the euro USD has done so and actually gone below as we saw yesterday. So in the 30-minute chart, it was lower, and then like the yen, we had a bit of a bounce, market sideways, trading back up to Friday's closed before the dollar opened on New York, and then, before all the traders came and moved the dollar, moved on the overnight, but tends to make its big move during the open, and the pound coming under pressure. Again, watch the low of this market. And finally, in the metals, as I said last week, if the stock markets move lower, then they were going to hammer the price of the metals, and that's exactly what they're doing. We're down to 78, we're going down to 18.05. We managed to hold at $19 an ounce yesterday with a bit of demand, and we are oversold, but that doesn't matter. We haven't finished yet, and you'll see why in just a moment. So yesterday, down, we did get a bit of a bounce during the session as the market came off when it went below $19, and they tried to bring it back, as you can see there, but overnight we're back below $19. So we'll watch the 1850, which is the blue line there in the S2. The low will be very important as well, because that's where the market found some support during yesterday. Gold not falling as much as silver. Just go back to that silver daily chart. You can see we're back at 78.89. And gold, we're back only 62.78, and that's why you're seeing the gold-silver ratio. I'll just pull that up there at 91 and moving strongly to the upside, because silver is being hammered more than the price of gold. And the reason for this, I'll show you in just a second. There's the 30-minute chart of gold with a bounce, and then finding support at the S2. Overnight, moving lower. But finding support unlike silver. And this is the reason the dollar is up towards the 109, moved very strongly in the last few weeks. There is no good currency, but it's the world reserve currency, so it's the best of a bad bunch. And you can see there 109, if that's taken out, which I suspect, then the price of silver and gold are going to head down to those recent lows that we saw in both of these markets. In gold, that would be 1680, and in the silver market, it's going to be that 1805 level. And finally, crude oil sideways to higher. The energy vigilantes are returning to their desks, according to an article on Zero Hedge. So expect to see some sort of move to the upside. As we go into winter, of course, that's going to be the case as well. But we've got a few weeks before we see that. Fingers crossed that the price remains suppressed at this time. Okay, that's it for this one. Let's see what happens with all the flash news, and see if the market continues to move to the downside today, or we get that straight reversal, which we sometimes see when we have a dramatic day to the downside. Okay, that's it for this one. As ever, thanks for watching. See you in the next.